Hello there, good morning and welcome to our webinar. The topic today is pension re-enrolment, and this is one of the webinars that counts towards our pensions discovery badge that we'll be telling you more about later on in the session. My name's Duncan, I'll be hosting and presenting the webinar, and I am joined by my colleague Sarah, who's standing by in the background, and she's ready and waiting to answer any of your questions. Let's now take a look at what we'll cover in the webinar. So we'll start with an introduction to the re-enrolment duties, explaining what they are, when you need to do it, and what steps are involved. We're then going to give you a demonstration of re-enrolment using the pensions module, and we'll show you how by running a pension assessment, it will identify and re-enroll the appropriate staff. Once we've been through that demo, we'll talk about re-declaration, explaining what's involved in declaring your compliance with the pensions regulator, sharing some handy resources, and then we'll take a look through some further support, including some of our upcoming webinars, how to access the Help Centre and Sage University. So let's start things off by talking about what re-enrolment is. So this is one of your key employer duties under automatic enrolment legislation. And it means that as an employer, every 3 years, you must assess any employees who previously opted out or left your pension scheme to see whether they need to go back in to that pension scheme and be re-enrolled. Now, the actual duties you have will depend on whether or not there are any employees that fall into a worker category that needs to be re-enrolled, but it will always involve completing a re-declaration of compliance with the pensions regulator. Now, when does this happen? Well, we know it's every 3 years, but it is based around the 3rd anniversary of either your duty start date, if you're a recent employer, or your previous re-enrolment date, if you've done re-enrolment before. And you actually have a 6-month window, starting 3 months before that anniversary and 3 months after, in order to complete your re-enrolment duties. Now, the deadline to do your re-declaration of compliance is 5 months after the 3rd anniversary of your duty start date or previous re-enrolment date. And remember, if you've decided to delay the re-enrolment up to the latest time possible, that doesn't affect the deadline for re-declaration. So if you did wait to the 3 months after the latest possible re-enrolment date, that would leave you with just the 2 months to do your re-declaration of compliance. So always good to sort of plan in when you intend to do this, decide on your re-enrolment date, and then make sure that you get the re-declaration done in plenty of time. So what steps are involved in re-enrolment? So we've got 4 steps here, which we explain in more detail in our guide. But step number 1 is to choose your re-enrolment date. So it's within that 6-month window based on the 3rd anniversary of your previous re-enrolment or duty start date. In that period, you would need to assess and then re-enroll eligible employees who previously opted out or left the pension. Step 3 is you would need to write to those employees explaining that they've been re-enrolled and that they still have the right to opt out again if they wish to. And step number 4 is to complete the re-declaration of compliance, which you would do on the pension regulator's website. Now, for any pensions module users, the re-enrolment functionality is built in to the pension assessment, and you're going to see that in action a little bit later on in the webinar. If you don't use our pensions module, you'd need to complete your re-enrolment manually. And what this means within Payroll is that you would do a manual assessment. So you would need to identify which employees previously opted out and need to go back into the pension. And then once you've found those employees, you would need to reassign a qualifying pension scheme. Check you've got the correct contributions entered. And then once you've done that, you'll be able to send a letter to them using letter templates that you can download from the pension regulator's website. So before we do this with the pensions module, I do want to give you a quick demo and share some tips on how you would do it manually. So let me bring the slides down. And first thing I'm going to show you is how you could do a manual assessment. So the qualifying criteria to be eligible for auto-enrolment is that an employee is aged between 22 and state pension age, and they have earnings above the earnings trigger. And an easy way to check this is to refer to your legislation settings. So if you go to your company tasks in Payroll, and then you click onto legislation, you'll see within the legislation settings, you do have an automatic enrolment tab just here at the top. And then from here, you can check the eligibility age, so 22 to state pension age. And you can also check the earnings trigger. So this is the figure in the middle column, and it's based around the employee's pay frequency. So it's a £10,000 a year trigger. The equivalent monthly trigger is £833. The weekly trigger is 192. So you can refer to these figures whenever you need to in company and legislation. Now, I know that I've got some employees that previously opted out, and I just want to recommend a report you could run that might help you to identify employees that would be eligible for auto-enrolment, but who are not currently in an active pension scheme. So I'm just going to select all of my employees. So they're all monthly paid in this example. I'm going to go to this reports icon at the top. And there's a report that I've added to my favorites, the Pensions Automatic Enrolment Report. And you would actually find that in the company folder. So if you select company on the left-hand side and then scroll down, it's this one you could run, Pensions Automatic Enrolment Report. And if I just run this to preview, it's then going to give me an indication of which of my employees might need to be re-enrolled. So I'll just zoom in slightly for this one. As you can see, it's identified 3 employees on my payroll, employees 1, 3, and 10. They were previously in a qualifying pension scheme. And if you're not using the pensions module, on the pensions tab in the employee record, it is possible to record opt-out dates manually. If you do use the pensions module, you'll manage all of this in pension assessment. So it's telling me that I've got 3 employees that are eligible that would probably need to go back into the pension scheme. Now, if you are doing it manually, once you've identified the relevant employees, you would then need to assign the pension scheme. So to do that manually, you would go into the employee record and click on the pensions tab. You would click on to manage schemes. And from here, I can see the previous pension scheme. So this was when they were first enrolled and they opted out 30 days later. And then it would be possible to add the scheme again. So you'd click on to add. You would choose the scheme they're being enrolled back into. You would set the join scheme dates. So whatever your re-enrollment date happens to be. And then you can record the active membership date. And this would be the date that you've sent their details to your pension provider. So if you needed to assign the scheme manually, you would do it here. You would then click OK. And then pension contributions would resume after your re-enrollment date. But I'm not going to do it manually because I am using the pensions module, which means that a lot of this is automated when I run my pension assessment. So that's just a little insight into the manual process. So you would do assessment of your employees, perhaps use that report to help you. You would then assign the pension scheme to employees that are being re-enrolled. You'd write to them using a letter template. And then if they then opt out again with your pension provider, and they still need to follow the official opt-out process, once you notify that they've opted out, you could then re-enter their leaving date for the scheme, and that would kind of stop the contributions, and you could deal with kind of any manual refunds required. Now, we're always looking for ways to make your life easier, and that's where the pensions module comes into play here. So I want to explain how it works when you're using the pensions module. We're going to explore the re-enrolment settings first, and then I'll take you through a full demo of how you would re-enroll staff back into your pension scheme. So first of all, you can locate your re-enrolment settings at any time from the pensions module settings. So you're looking for the option to manage cyclical re-enrolment settings. And when you click onto that, it's going to display the suggested re-enrolment date, which will be the 3rd anniversary of your previous re-enrolment or your duty start date. It'll display the window to complete your re-enrolment. So you do have some flexibility there. And then you can set your option for re-enrolment exclusions. So under the re-enrolment rules, you don't have to re-enroll employees that opted out within 12 months of your re-enrolment date. So if they've recently left or opted out of the pension scheme, your re-enrolment then comes about. You can put them back into the scheme. If you want to, you can choose not to for those employees that opted out within the last 12 months. So I'll show you where you can set that setting in the demo. So let's take a look at that now. So I'm going to start here at my company tasks here on the left-hand side. I'm then going to go into pensions module settings from the list of tasks. And you can see here in my example, my duties start date was the 1st of January 2023. So that was the date that this company took on their first employee. And as you can work out from that, 3 years from 2023 is 1st of January 2026. So we are kind of approaching that re-enrolment time. To get into my settings, I would click on to Manage Cyclical Re-enrolment Settings. And you can see it's suggested the re-enrolment date of the 1st of January, which is the 3-month anniversary. But it can be changed from here by selecting any date within that 6-month window. Now, what you won't be able to do is to re-enroll in a historical tax period. So in my payroll, I've just completed my November pay run. And if I try to set my re-enrolment date, say to the 1st of December, which falls into the November tax month, you'll see that I get a warning that that's a historical date. And it means that the pensions module won't be able to do the re-enrolment for you. So it needs to be set in a period that you have not yet processed. And we'll talk about pay reference periods and re-enrolment in a few moments' time. So I'm actually going to set this to the 1st of January. I could delay it up to any date, kind of up to the 31st of March in this example, but I'm happy to go with the 1st of January as the re-enrolment date. And then in this section underneath, I can decide whether I want to re-enroll employees who opted out or ceased membership within the last 12 months of that date. So the default setting is to include them, but actually I want to exclude them because I do know that I have some people that opted out recently, and I would prefer not to kind of put them back in and have them opt out again so soon. So I'm going to exclude them from the assessment by setting this option. The other thing you can access from here are individual employee exclusion reasons. So you might need to use this for some employees that have opted out if there's a specific reason why they shouldn't be auto-enrolled, or re-enrolled, I should say. The valid exclusion reasons are shown in the drop-down list. So a common example would be employees working their notice period. So if someone's given notice that they're leaving, happens to be around the re-enrolment date and they've already opted out, you could exclude them on the basis that they are working their notice period. And if you set that exclusion reason from this screen here, that would prevent them from being re-enrolled. Now, actually, I don't need to exclude any of these employees. So I'm just going to leave these as they were with no exclusions. And I can save any changes I've made to these settings. And of course, I can go back into them if I want to review them at another time. So that is where you find your pensions module re-enrolment settings, and you'll have one last chance of reviewing and confirming those settings before you actually complete the re-enrolment. Okay, so let's now talk about when you would do this and when you would run your assessment to re-enroll your employees. So you might remember this from when you first staged for automatic enrolment or the last time you did a re-enrolment, but employees must be assessed in the same tax period as your re-enrolment date. And the reason for this is that the pensions module uses tax periods for pay reference periods, and the assessment needs to be done in the same period as your re-enrolment date. Now, sometimes this would mean that the re-enrolment date falls after the assessment date, so the date the employee is paid. And in that scenario, the contributions would not begin until the following pay period, and the first contributions after being re-enrolled would include a pro rata amount. So this is better to explain with an example, and this is the example I'm going to show you in the demo as well. So I'm dealing with employees paid monthly, and their usual pay date is the last day of the calendar month. Now, I've selected a re-enrolment date of the 1st of January, and that falls into tax month 9. So that's the pay reference period for my re-enrolment. What that means is when I run the pension assessment on the 31st of December, that is the period in which I will be re-enrolling my eligible job holders who previously opted out or left the pension scheme, because that's my pay date in tax month 9. But it does mean that pension contributions wouldn't start until the next pay date, which will be the 31st of January. And the first contributions for the employees re-enrolled will include a pro rata amount for the period 1st to 5th of January, so the end of the previous pay reference period. And because I'm doing it this way, it actually gives my employees the opportunity to opt out with the pension provider. So when I send the enrolment details to the provider, they can then opt out, and potentially they could do that before any contribution is actually taken, because my re-enrolment date happened to fall after the assessment date. So I'm going to show you this example in a demo now. So let me just bring the slides down again. I'm just going to return to my payroll tasks. As you can see in my employee list, last period I updated was the 30th of November. So I'm going to be doing my re-enrolment on my 31st of December pay date. And I've already gone ahead and set that as my process date in the program. Remember, I've got 3 employees that I think will be re-enrolled. And currently, if I take a look in the employee record on the pensions tab, because I'm using the pensions module, they have a status of opt-out. This first employee opted out back in January 2023. They haven't chosen to opt back in, but we're expecting them to be re-enrolled when we do our pension assessment. So I've got everyone selected, and for this demo, let's assume I've entered all of the payments for the 31st of December. So that's the pay period that I'm going to do my re-enrolment. So I'm going to run the pension assessment step, which comes directly after enter payments. And because I have now reached my re-enrolment date, I'm seeing this pop-up message. It's then asking me to review and confirm my re-enrolment settings. So this is my chosen re-enrolment date. That was the window to complete re-enrolment, and I've already been in and I've set the option to exclude recent leavers or opt-outs from this assessment. But I do have one final chance to change these settings if I need to. So I can jump into here. I can maybe add individual exclusion reasons where required. So to confirm you're happy with the settings, you would tick the box at the bottom here and click proceed. You'll then get the prompt to take a backup, and I would strongly recommend that you take a backup for this assessment, just in case you need to undo anything that happened. So I'm going to call this one re-enrolment. That's my safety net in case I need to do this again. And then when it takes me into the assessment screen, we're going to look out for any flags indicating a change. And we can actually see there are 2 flags. And if I hover over it, it's saying that the eligible job holder is re-enrolled this period. It says exactly the same for employee 3. So we could look at the status of these employees. So it shows me why they're eligible. They're earning above the trigger, they're the right age. The enrolment date this time has been set to the 1st of January 2026. It shows the default pension scheme to put them into and shows me the percentage contributions, but it's not showing any contributions being calculated this period. And the reason for that is my process date, 31st of December, is before the re-enrolment date. So in the background, it's working out the pro rata amount for this period, which it will then add on to the first contributions taken on the 31st of January. So nothing being deducted at this point, but we have re-enrolled them. Now I also want to point out employee 10. So this was an employee who had also opted out, and you can see that their status remains as opt-out. And the reason for that is they only did it in November 2025. They opted out on the 10th of November because that's within 12 months of the 1st of January, the re-enrolment date, and I set it up to exclude employees that recently opted out. They're not going back in this time, but if they're still with us in another 3 years' time, that's when they would get re-enrolled. So if you want to keep a copy of this assessment, as usual, you can print it or export it as a CSV using these options at the bottom. I'm just going to simply close out of this screen, and it will then outline my next steps. So we will need to do our redeclaration of compliance by the deadline. You must send the enrolment files to your pension provider. So do that in the same way you usually do for employees being auto-enrolled. So you might use Send Pension Data. You might run reports. You might do it manually on your pension portal. And then you do need to write to your employees within 6 weeks of the re-enrolment date to inform them. And we can do this using the Send Pension Correspondence option. So I'm going to close out of that, which then takes me back to my employee list. And if I just show you the 3 employees that we were focusing on. So for the first one, they are back in the scheme, they're re-enrolled as of the 1st of January. It's automatically re-added the pension scheme to them. Similar for the next employee, they've also been re-enrolled after being opted out. And then for employee 10, they've been auto-enrolled and opted out last month. They're going to stay opted out because we chose to exclude them from this process. So we don't have pension contributions for these employees just yet. So we produced the pre-update reports and payslips in the usual way. I would then run update records just to finalize this payroll. And then you can send your full payment submission to HMRC, just as you usually would in any other pay run. Now, the other auto-enrollment tasks are to send pension data. So if I was using Pensions Data Exchange, for example, that would then send over the details of the employees being re-enrolled. I can run Send Pension Correspondence. So this generates the letters that need to be sent to the employee. Now, sometimes the pension provider would do this for you, in which case you can mark these letters as sent. But this is, I'll just show you the preview. This is the re-enrolment notice that will go out to these employees. So it just explains the re-enrolment date, what the criteria was, a note on tax relief, and then some frequently asked questions. So this is based again on pension regulators' letter templates. So if we're sending these ourselves, we would select them like so. You'd record the date on which they are sent. So I'm going to send these the day after the re-enrolment date. So I'm going to go out to the employees on 2nd of January. And then I'm going to mark that the user has sent them. And then if I click on to send, I'm then able to print these out. Or if you email documents to your employees, it can attach it by email. So I go ahead and click send. And then I'll just be prompted to print the re-enrolment letters. Okay, let's just gone to the background there. I'm going to cancel out, actually. I don't want to print these out. All about saving paper. Okay, it was a little bit slow that time. It's also creating a PDF and attaching that to the employee records, but you can see in the historical communications, re-enrolment notices are now recorded as sent. So for employees 1 and 3, on the Documents tab, we've got their re-enrolment notice saved as well. Now, just to complete this demo, I'm going to move my process date forward to the next pay date, so 31st of January in the new year. I can enter the payments for that period as normal, and then when I go into the pension assessment, which you would always do after enter payments, you would take your backup in the usual way, and this is when I expect to see the first contributions. So we can now see for employee 1 and 3 who are re-enrolled, we've got contribution details showing. And if I just show you employee 3, so they earn £2,500 per month, which is the same as employee 2, but you'll see that their contributions are slightly higher, and that's because they include the pro rata amount. So in that month only, they'll have slightly higher contributions, and if they're staying in the scheme, it'll go down to the usual level from next month onwards. If by this point you've received any opt-out notices for these employees, you would opt them out in the usual way. So if I select employee 1, I can click opt-out leave. I can enter the date that I received the opt-out notice. And because this would have been the first time a contribution was made in this example, there's nothing to refund. I simply process the opt-out notice. And you can see that's opted them back out, and it set their contributions back to 0. But if you had taken a pension contribution, maybe they're paid weekly, it's taken them a few weeks to opt out, you'd get the option to refund it. So that is re-enrolment using the pensions module. So that was the specific example we went through. You'll be able to see that on the handout as well. And just to recap the steps that you've just seen there, as we went into the pension assessment, because we're in the same period as our re-enrolment date, we need to confirm we're happy with the settings and ready to proceed. You can then filter for changes. You can look for flags, and you'll see any employees that are re-enrolled into the pension scheme. And depending on when the re-enrolment date is, you may or may not see pension contributions at this point. When you close out of the assessment, you get a reminder of your next steps. And then when you go into send pension correspondence, that's where you can produce the re-enrolment letters. So that's what you need to do in payroll. The other thing you need to do within 5 months of the 3rd anniversary of your duty start date or previous re-enrolment date is your redeclaration of compliance. And that's just a reminder there of the timeline. It's all based around the 3rd anniversary. You choose your re-enrolment date within that 6-month period, but the deadline for your re-compliance or redeclaration of compliance is 5 months after the anniversary date. Now, I can't show you much of this process because it's all done on the Pension Regulators portal. There is a handy checklist of the information you'll need. So essentially, you're providing statistics on how many employees are already in the scheme, how many employees have been re-enrolled, etc. You will need your letter code, which you'll have received on your re-enrolment letter from the pensions regulator. And there is a handy checklist which I can just show you on screen, actually. You can download from the pensions regulator, and this will prepare you for the information that you will need to provide. So strongly recommend you have a look through this. I have linked to the re-enrolment information on the pension regulator website. So you'll need things like references, details on your pension scheme, total number of staff employed and re-enrolled, and then also some top tips to help this go smoothly. So you can find this if you follow the link that I've provided on the handout. You'll also find the checklist as well. So once you've signed into the portal and you've done your re-declaration, that's you done for another 3 years in terms of re-enrolment duties. But obviously, if you have re-enrolled staff, keep an eye out for any opt-outs that might come back in. And that's the same process as it's always been. It's managed by the pension provider. They would then inform you who has opted out and whether any refunds are due. So that's it for the demo for today's session. It actually brings us to the end of the content that we're going to cover. We will stick around as we do have some remaining time left, give you the chance to ask any final questions that you may have. And I'd also like to tell you a little bit more about the Pensions Discovery badge that you can earn by participating in our Pensions Discovery webinars. So this is a series of 8 sessions altogether. You need to attend at least 5 of the main sessions plus the pensions quiz in order to earn your digital badge. So we've run them once, but we are repeating each of the sessions over the next couple of weeks. So if you missed any of the previous ones, hopefully you can get signed up to join us on the repeat sessions, which are taking place throughout December. You do also need to attend our quiz. It's just for fun, tests your knowledge on what we have covered in the webinar series. And if you meet that criteria, we will send you your link to your digital badge, which you'll be able to access. We'll be sending that hopefully by the end of December. So to get signed up to any of these additional sessions, you can follow the link there on the slide. Further support can also be found on our Help Centre. In a browser, go to sage.co.uk/help, or in Sage 50 Payroll, click the Help icon and you'll find the in-product version. It's really handy for searching our knowledge base. Also, if you need to find contact details for our support team, head to the Help Centre first and choose the topic you need help with. And then if you click the Get in Touch link, we'll show you the best way to contact the team. Another fantastic learning resource is Sage University. You can access this at sageu.com. Just simply set up your free profile and then find your way to the Sage 50 Payroll learning resources, and you'll have e-learning courses, certification and bite-sized learning to brush up on your payroll skills. So as promised, we will stick around a few more minutes just to kind of tackle any of those questions. Remember, if you'd like to keep any of the Q&A, copy and paste it into a Word document. But if you'd like the handouts, you can download those by clicking on the piece of paper icon, and you can save a PDF to your PC. If you are leaving us now, when you exit the webinar, we'll invite you to take a survey. So we'd love to know what you think of our webinars. We use all of your valuable feedback to improve the sessions moving forward. So if you wouldn't mind completing that, we'd appreciate it. And look out for a follow-up email that will be sent in about an hour's time. That will contain a link to the recording of today's session and also another link to the survey if you missed it when you left. So that'll be arriving shortly after 11 o'clock. So I'm just going to go on to mute for now. Help Sarah out with the questions. I will come back to you when we are ready to close down the webinar. So I'll speak to you soon. Again, everyone, and thank you so much for sending the questions through. I think we're just getting the final answers out. to a couple that have come in at the end there, but as we haven't had many new questions, I thought I would take the chance to wrap things up. So I'd just like to thank you once again for joining us at the webinar this morning. I hope you found it useful and you've enjoyed the session. Please do take a minute to complete the survey when we close the webinar, or using the link in your follow-up email. That'll be sent in about an hour's time, and it also includes a link to the recording of today's session. If you haven't already, get yourself signed up to the other pension sessions and the quiz, and we look forward to seeing you on some of those webinars and hopefully to you earning your very own digital badges. But on behalf of myself and Sarah, I'm going to say goodbye, enjoy your weekends, and we'll see you on the next one. Goodbye for now.